Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for the evening of Tuesday, the 2nd of February, 2021. Wow, down $135 in GME. So this was a $483 stock recently, and it's back down to $90. God knows where it's going because nothing in the company fundamentals have changed, but we have to hope that management was strong enough to sell a bunch of stock, get a hoard of money so that they can rebuild their company. Did they? I don't know. AMC, this was a $20 stock 2 days ago. We're back to $7.82. So you can join in on these parades, and I'm not saying you should or shouldn't. What I am saying is it'll be the last one as you dance around those chairs like we all did as a kid, and you're the one standing. That is the problem. Because what happened here is you're getting into an event, not fundamentals. You're not trying to lead the fundamentals unless the fundamentals have changed where the Reddit people and social media sites like that can drive these values up and then get out in time. If they do, they've really accomplished something. But they've accomplished something anyways. They've made us all aware of them. And that to me is very important. You have to adjust your trade accordingly. Nothing wrong with that. Let's go to the chart action. I've been telling you that you've had an island formation for a long time. It's over. You have now, with this action, filled that gap. So I am suspecting, just my hunch, this market is now starting to play here, trying to form a base, hoping that as we get into the Biden administration and the 4 years of Biden, that we're going to get an awful lot of infrastructure talk, real money thrown at it, and things going on. We'll find out, but the market came alive today. Now, when I put on this chart my swing line, I have a pattern of a lower low and a higher high, but more important, this was the end of an event. The event was bearish. You've been having a pattern of lower highs, lower lows. You stopped there. You stopped in this support line, and all of a sudden you took out that day's high. So after a break that began right at the beginning, if you will, of the year, and is gone right now for about 3 weeks, you broke that pattern finally. As you break the pattern, now the question is what next? Well, if the market wants to rally, the resistance, as I see it, is 22.21, the 18-day moving average of closes. Some people use a 20-day, a 21. I use the 18. I'm very comfortable with it. I have bought services in the past to try to optimize them for the which one you do. I didn't find them worth the time or effort because I'm not that kind of trader. I am not trying to day trade, but I am a swing trader. If you give me an opportunity and you can get into these markets and catch a move like that and get up to a certain point, why not? Why wouldn't you do that? I mean, you don't have to get married to these forever. So that is one of the things that I'm always looking at. The next thing I'm looking at, Bollinger Bands. These black lines, developed by John Bollinger. If you don't know what they are, learn about it. You can go to Investopedia. We have a great set of volumes 1 and 2 of technical guide to indicators. They're totally free. They're on our website under free offerings, so you might want to sign up for that. It really explains a lot of this with graphs and teaches you some basics. My course, my charting course, I think the best out there for using all these indicators that I work with. But you got the lower low, higher high. You found your support. You only stay under that band 5% of the time. You can push it out. When a band narrows dramatically, eventually it's like a spring inside of a pipe. You're winding it. It's going to burst out. Then you're ready to catch a move. But these type of moves, these broad moves, they rarely do that. You need a super fundamental change in something that I can't even imagine. I'm sure it's out there, but I can't imagine what it is. In any case, I see the end of a downtrend, market trying to lift, and I see a market that was oversold trying to give a bounce. No, I'm not bullish, but I'm no longer in the bear camp. That's very important. On SMH, I am in the bull camp. I've been looking for this market to get friendly here. I've mentioned it to you. I told you yesterday I thought the pros went long right on the close. I think that they're looking if they can raise the market, maybe the upper Bollinger Band, momentum turning up. This is yesterday. Higher lows, higher highs, a close over the 18-day average. If you weren't in it, I think the pros will reach to get in it on Tuesday as they did today. And you can see the market's still lifting. That doesn't mean I'm right. I could be very wrong and the market takes out 225.57 and I'm wrong to trade. But until that occurs, I am still looking for higher prices, and I've given you an idea of where that might come in. If we look at the industrial sector today, just like we saw in PAVE, you ended this pattern of lower highs, lower lows. I think today was real important. Markets sometimes try to get going, they don't, but you ended without question that wave to the downside. Now you don't have bull trends in a lot of these, only the SMH does, but you do have the lower low, higher high, and momentum turning up, and you're no longer in the downtrend. In XLE, the high today was not up to the previous high, but you're oversold like the others coming down. Would not surprise me that it does that in the next day or two. Do I think you're going to attract new fresh selling here? I do not. Why? Because you're this oversold in the market, and you've already hit the Bollinger Band, and you proved that you could bounce far from it. QQQ. Now we're knocking on the door of new highs. The market's got a lower low, and with today's action, a higher high. This is how you looked yesterday. Do you disagree with me that the battleground's been the 18-day average of closes? Do you disagree you haven't been able to get down to the lower band other than back in November? So I'm not looking for a big decline, period. And the market took off. Now, this is the stronger of the Dow and the other indices, but it's a good one. Resistance now, as I was not looking for it here, I am looking for the resistance to be hit at 330.89. We'll see if that happens or not. In the emerging markets, I'm looking for the same signal that we have in PAVE and that other index. Take out, finally, this 74.34, and I will say that this leg to the downside, finished, done, goodbye. I think it ended anyways because you did this and you had no follow through, but we will see if I'm right or wrong. First resistance, 74.66. A lot of traders want to be long emerging markets. One of the popular trades of the year, they were wrong this. The other popular trade of the year was being short the dollar. They were wrong that. It's only February 2nd. Give the market a chance. In gold, what I've been telling you I'll stick with. You're not trending. You have a higher high, lower low. I'm not surprised at all this action. Now be careful here. You're within a hair's breadth of getting the 18-day average to get under the 200. That might drive the market to 170.23. Resistance is going to be between these averages if you rally. The 200 to the 18, and then above it, the combination of the 100 and the Bollinger Band. Plain English, a lot of resistance above the market. Gold miners, while I'm not bearish, I'm not bullish. I've got a lower high, lower low, battleground 18-day average, nothing going on there. TLT, I am still very much in the bear camp in the Treasury instruments, in a number of the markets. Lower highs, lower lows. Bollinger Band objectives 150.35. You missed it today by about 17 cents. We'll see if it can mount an attack of that one way or the other. And last, the FXE. I've been looking for the Bollinger Band to be hit again with the downtrend. It did it in an oversold condition. I think the pros are taking their money off the table now. Between here and the 100-day, if it stretches down, I look for them to cover their whole position, and I think you have to wait and see what next. Now, when I talk what's next in some of these markets, it gets interesting because I don't know if you're aware what I do first thing in the morning. But in the mornings, I go out and I cover in great detail all the futures markets, and then right afterwards, I cover all of the spiders and the from there, the ETFs. And I'm giving you trade ideas with them back and forth. Now, what do I mean by the trade ideas? What I try to do in the markets is I'm going to cover all these different areas that you see behind me. These prices will fill in a moment here. And I'm giving you 40 some odd charts in the morning. I'm giving you daily charts. Sometimes I'll look at the weekly. I'm setting you up for short-term and long-term trades with very specific. I want you to buy here. I want you to have a stop there. I want you to look at the market this way. If you haven't tried it, simply go to our website, www.iraepstein.com. Go under research at the top. Everything's explained. I'm Ira. Have a great evening.